I was wrong about the Fed meeting. I had been calling for a 50 basis point cut for the last 6 or 7 weeks, and it did not happen. In fact, it did not happen by a long margin. In fact, I thought there was a very good chance we would have a three-way divided Fed where you would have some Fed presidents saying pause, you would have some saying a quarter, and you would have up to three saying it's time to go 50. Now, that did not happen. Now, some of this could have been theater. Frankly, I think it was. The fact that Michelle Bowman, Christopher Waller didn't vote for 50, I think was more of a sign of solidarity. It's also a sign that probably Christopher Waller and Michelle Bowman are no longer in the running for Fed president, in my opinion. What am I saying? I'm saying that the Fed decision was 11-1. So 11 Fed presidents said a quarter, and only one said 50. Now, the 50 came from the newest member, just placed on Monday, I believe. And he was all kinds of cut. Its names are not on the dot plot, but I think it is pretty easy to see that the newest Fed member, and really a part-timer, he will only be there until the term is up. He not only did he say 50, but he thinks there should be 150 basis point cuts in 25. Yes. He believes there should be another 5 rate cuts in 2025. So let's talk about the dot plot. Let's talk about what Powell said. There's all kinds of stuff in here. The first thing I will highlight is when they released the dot plot and they released the announcement, the general feeling was it was dovish. How do you know? Well, if you actually watch the interview with Matt, the mortgage guy, he and I were recording at 11 o'clock, which is right after the announcement. And the 10-year note went sub 4. In fact, during that call, I think it got as low as 3.92. So below 4%. And then, as expected, Jerome Powell got in front of the microphone and he talked all kinds of hawk. This is what I expected. I actually talked about it on X or Twitter. I expected Jerome Powell to come out and be a hawk and take rates higher, the 10-year higher, and ultimately take mortgage rates higher. So if you were doing a refi, rate and term, or cash out, or purchase, my hope for you is you were not like the average consumer. The average consumer, time and time and time again, sees rates falling, sees the Fed's about to cut, and waits. Just like the last 3 times, now 4. The Fed cuts and mortgage rates go up. I tried to warn you. Hopefully, if you liked it, you locked it, and you moved forward. But now that we've gotten the quarter, what's next? So I got so much notes here, not really in any great order. Let's talk about this. Let's talk about Powell first. Powell has kind of pivoted off of data dependent. He is now highlighting risk management, specifically downside risk to the labor market. So if that's the case, what should you and I be watching? Well, we do get this Thursday report called weekly unemployment claims. We did get it again this morning. Weekly unemployment claims, folks, remember last week spiked to 266 out of nowhere. There was some talk that the elevator was going up. However, I cautioned you that last week was a dirty week because of Labor Day, and I expected some clawback this week, and it happened. Weekly unemployment claims fell 33,000 down to 231K, back to our standard 220 to 230. So the yellow flag is now gone. But that is something we can watch. We can watch the unemployment rate, which is published monthly, see if that continues to go higher, and lots of other things. Hey, Kyle, thanks for the super chat. I appreciate it. I think I can put that on screen, right? Yeah, look at that. Look at that. We got a super chat. So what else? Why did the 10-year note go sub 4 before Powell spoke? Well, frankly, it was a dovish dot plot. And what do I mean by that? Well, the Fed since September, or since the last time they did this, I think in July, they now pricing in one more cut. So in the last dot plot, we were going to have a total of 2 rate cuts. Now the Fed sees 3. So that is net dovish. That is also what the market expects. So now you have the market and the Fed aligned. And that is what took the 10-year note sub 4 and would have taken mortgage rates sub 6.1. Not the quarter point cut we got. It was the expectation of an additional cut. That is why we had a moment in time where the 10-year note hit 4%. And then, of course, Powell gets in front of the microphone, talks all kinds of hawkish, and suddenly nobody remembers the dot plot. What else do we got? So again, one extra cut. GDP is expected to be stronger. In the last forecast, they were talking 1.6% for 2025, now calling for 1.8. Unemployment is now expected to go to 4.5. I believe last time it was 4.4, so higher unemployment. Inflation is expected now to be 3%, not 2.6. And again, as shared earlier, an additional rate cut in 2025, so 2 more. As expected again, Tony, if you didn't hear it, mortgage rates went up because Jerome Powell was a hawk. Mortgage rates went up, not down, as expected. Again, the low point on the dot plot is calling for a total of 5 more cuts in 2025. There's actually one person. This is how messy the Fed is. There is one Fed president talking about a rate hike. Yes, folks, rate hike in 2025. Not rate cut, rate hike. Again, Powell on record saying job growth is now below break even. Again, that is what his big concern is now that the unemployment rate is going higher. Jerome Powell also said a lot of the country just doesn't have enough housing for people. Again, he was trying to peg for breaking the housing market. Excuse me. And his answer is build more housing. Tariffs being paid by U.S. importers. Again, we've talked a lot about tariffs. Is it the country that's selling? Is it the person importing? Or is it the consumer? According to Jerome Powell, it's the importers that are bearing the price of tariffs. Jerome Powell was asked a lot about the dirty data and the jobs information. And he said, basically, the birth-death model that the BLS uses is tough and led to over-reporting. Sounds like an excuse to me. What else? 9 out of 19 Fed presidents see 50 more. So again, that would be October and December. So 9 out of 19. 6 actually see 0. Yes, folks, 6 Fed presidents still see 0 cuts the rest of the year. So you have 9 with 2 and you have 6 with 0. Again, the Fed is in a tough spot. And then you have one Fed president, probably Fed President Merriman, with 5 cuts. You got 9 with 2, 6 with 0, and 1 with 5. That is a messy Fed. We did have one new member join our amazing school community, Pablo. Pablo, thank you for joining. Make sure you introduce yourself. Also, folks, just want to let you know there is a brand new accountability group. Yes, a brand new accountability group starting tonight at 5 p.m. Pacific, so 8 Eastern. There's a brand new accountability group. I think it's called Thursday Domination or something like that, something catchy. But make sure you tune in for that. Again, having now 9 accountability groups that you can choose from, figure out which one fits your schedule. Also, don't forget to buy your tickets to Vegas. I am giving $100 away in teachable credits. We're going to have a very intimate call in October with all September ticket buyers, and you can get an autographed book. If you buy 2 tickets, you can actually get both autographed books, One Rental at a Time and 15 conversations with real estate millionaires. So hopefully you see value in that. David Tepper's out talking. If you don't know who he is, he's just another billionaire investor. Says the Fed could cut a few more times, but risks entering the danger zone. The danger zone would be either a spark in demand, i.e. what we had in during the pandemic where demand dwarfs supply, aka inflation, or even worse, an asset bubble. To which I say, aren't stocks at all-time highs? Aren't housing at all-time highs? Doesn't that feel like richly valued to you already? But hey, who am I? Lastly, folks, the most interesting thing I read today is NVIDIA. NVIDIA is making a $5 billion investment in Intel. They are going to co-develop data center and PC chips. I think I saw this morning that Intel was up like 30%. And as I recall, didn't the US government get a 10%? Was it 20? 10% share of Intel? I guess that trade looks pretty good. All righty, folks. Again, I want to kind of end this where I started because I think I owe it to you. It's what we do here. I was wrong, spectacularly wrong about a 50 basis point cut. My thesis all along was the Fed was wrong in July. The data they had was wrong. It was terrible. My thesis always was if they had the data in July that was accurate, they would have cut. And given that we've gone even worse, they would have cut today. They would have cut yesterday. That did not happen. I was wrong. I'll try to do better next time. But hey, you get to learn your lessons. And I love making calls, love seeing what happens. But I got this one wrong. Do me a favor, join school. Let's get over 500 wealth builders in there and buy your tickets. I'd love to talk to you in October and get you some free teachable courses. And lastly, don't forget our sponsor of the daily financial news, Steadily. Steadily is landlord insurance only. If you are a landlord, you are undoubtedly seeing higher insurance. So might as well get a second quote, second bid. They have helped Olivia and I multiple times, most recently on a duplex, before that a fourplex, before that a house. Sometimes they help, sometimes they don't, but you might as well give them a shot, see if they can help you. Take care, everyone. Later.